projects. We've seen that happening selectively in a clutch of very bottom-up specific sectors. But here, that group has seen some buying. That Deven Choksey looks at multiple things, but also conglomerate stocks very, very closely. Johnson right now for some perspective. Deven bhai, so good having you. Thank you so much for taking the time out. And would love to know, what do you think about this? Is this value buying? Because, I mean, GQG's name in India rose to fame when at the peak of the Hindenburg issue, they made some very large investments in the Adani Group.
Hi, Neeraj. Good afternoon. Well, not very surprising, though, that they have bought in the last quarter the particular stake, largely because of the market condition also favored them, I think, at lower levels. Frankly, the fundamentals of the businesses of either you look at Adani Enterprise or Adani Ports or even for that matter Energy Solutions or Greens, they remain absolutely, I think, convincing as far as I think their execution plans are concerned. I think they are on track. So from a perspective of buying at lower levels, I think it's something which is justified, particularly when I think you are already invested about 80,000 crores in the group over last couple of years in which I think you invested. So certainly they have added, I think, marginal stake increase. As I see it, I think a couple of developments are favoring them. In case of Adani Enterprise, in this year, that is financial year 25-26, two of their main properties, call it, I think, the businesses, the airports and the roads are likely to get demerged out of the main unit, that is Adani Enterprise, which has incubated these businesses. They are likely to get separately listed, and that's where probably I think one is going to get the advantage of buying Adani Enterprise stock, I think, to get the advantage of the shares coming in from these two companies. It is expected that both these companies, the airport and roads, both are cash generating machines. And it's expected that some of the large investors, infrastructure investors included, for the sake of buying businesses also which are generating cash, I think they would probably get into this particular business. The port, once again, I think is showing a robustness, already touched 500 million metric tons of the business on cargo handling side. And I think going ahead, along with the mix in the international market, going ahead, I think they are talking about increasing the cargo handling to 750 million to gradually to about 9 million metric tons by the end of 27-28. So it looks, I think, a very strong proposition for anybody to look at this particular business from a perspective of seeing the growth into it. And likewise for Energy Solution, which is in transmission and distribution business, which is again, I think, a big cash cow. It basically, I think, suggests that these all businesses are well integrated, driven by the domestic economy factors, and certainly working well as far as I think the long-term investment is concerned from the perspective of large investors.
Sir, this is Harsh also joining in. Great chatting with you. So, wanted your take with regard to cement, because there's just so much happening within that sector. There's pricing, which is an issue. There's consolidation, which is playing out. And you have these two large players, ACC, Ambuja, both of which are Adani Group stocks. What within cement and how should one play it? And would ACC, Ambuja disproportionately outperform in that sense compared to the others is really what I want to understand.
So my understanding of this business is fairly simple. On one side, you have got the raw material, which is limestone. On the other side, you have got a complete logistic under your control, be it, I think, inland water transport arrangement, or be it, I think, the railway cargo arrangements. I think you have a complete handle on this particular aspect. So logistic cost management gets taken care of with the infrastructure that is there in the port as well as railways. And the raw material, which is including the limestone mines, and at the same time, the lower energy cost, I think, which is basically helping them. On one side, they're implementing the green energy. On the other side, I think they're adding both Abuja as well as in ACC, systematically a mix of blended energy, which is, I think, from the agri-waste as well. So in my viewpoint, I think they are basically taking care of on input as well as output, I think, cost management systematically. And unarguably, the cement as a commodity is basically finding higher and higher demand at every stage. With the cost factor remaining low and the demand remaining on a higher side, with the increased capacity utilization, it promises to increase higher amount of profit in the current year as well as in the next year. So from a perspective of looking at commodity, which is driving the growth and the cash is generated along with, I believe that I think this is probably becoming, I think, an important play for Adani, given the strength that they have in both these areas, the input as well as output, as well as distribution.
And so that aligns well, because the way LIC has hiked its stake, and I want to flag this off, from 6.4% in ACC in March of 2024, it was just at 6.57% in December of 2024. Now sitting at 7.7%, so sizable increase. They've literally bought 1% of the market cap of ACC in one single quarter. That is LIC. Of course, and known to be a value buyer, right, in that sense. What about green energy, sir? Prospects there. Is there value in that business?
Well, yes, I think the best part is that initial phase of putting larger cash and remaining, I think, cash deficient, I think that stage is getting over. Largely because of the fact that I think you're putting across 50 gigawatts of green energy capacity by 2030. And today, as they complete different modules, they start generating the cash. So to a greater extent, I think the cash which is being generated is being deployed for creating the further expansion. So to a greater extent, I think this is an automatic machine in a way, if you want to call it as, wherein the cash generated is getting deployed into the expansion part of the activity. In my viewpoint, I think the cost of implementation on a per megawatt basis, as far as the green is concerned, is actually coming down because of the use of the better technologies, etc. And that is possibly also helping them in having the better amount of, I would say, profitability factor we are getting established for that. So one can remain confident about it. Of course, I think the energy, the green is basically, I think, right now quoting at a valuation which is not extremely cheap, but at the same time, if one is having a view for next 3 to 5 years, certainly at some amount of time and price correction, one can buy this particular stock into the portfolio. That's what our view is.
I have one final question, and that is on the flagship with the Navi Mumbai airport around the corner, the airports business getting a lot of traction, and some of the other businesses reaching a really sweet spot in terms of size and operational metrics. What's the thought here? Hasn't really performed, and maybe because of that valuation, it seems to be a logical buy for a large investor like GQG. But what should a retail investor do? Adani Enterprises.
Yeah, Niraj, I think the airport business to me is a daily cash generating business. Like I think your road and the toll business that you have. And I think what they are possibly doing is creating an expansion in this space as well, wherein your existing airport operations, I think, are expanding to the new airport that you are acquiring as well as building. I think that is continuously going on. So in my viewpoint, I think this business will continue to generate cash. And as I always call it, this is a business, the road as well as airport, which are heavily capital intensive businesses. They are largely good for, I think, some of the large funds like sovereign funds, insurance funds, pension funds, or for that matter, I think the hedge funds, which are focusing largely on the infrastructure side of the story. For them, I think they remain good because it provides you the discounted cash flow visibility over the next 25 to 40 years because of, I think, the inherent operations that they have built into this space. So yes, I think I don't know about retail investors, how much patience they would have for continuing with this kind of investment, which is demanding higher amount of infusion of capital also from time to time. But I think for such kind of large institutional investors, I think this business remains, I think, an attractive proposition to build the fund.